Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Counsel Incorporated. Welcome back to the show, Danielle.
Hello, Jim.
Danielle, what's the deal with the disconnect between a rising stock market and plunging after-tax corporate profits?
Yeah, well, plunging and flatlining. Flatlining profits has been a story now for the last 3 years. And so what we've seen in the stock market has been the handful of the largest tech names primarily. So if you look at the S&P 500, for example, the 5 largest, the Facebook, Amazon, Apple, Microsoft, Google, they're now up year to date about 35%, while all other 495 companies in the index are actually down, so negative on average year to date. So this rally that we've seen off the March bottom in stocks has been very, very concentrated in a handful of names. And the same thing goes really if you look at the TSX, only we're even worse in Canada where our stock market is 9% higher today than it was 12 years ago. If you look under the hood, there's a handful of companies that have rallied in the last few months. Primarily things like Shopify and other tech sector names have been big. Some of the gold miners have rallied here in the last few months. So that has, brought the TSX back up from its all-time low or from the bottom of where it hit in March. But all of this is really a story about the U.S. dollar, and I think that's what people miss. So the U.S. dollar, peaked out at 102.82 or so on the index in the bottom of the market in March 20. And today it is almost 8% lower at about 94.70. That's the U.S. dollar basket. So that's against the euro primarily, 56% euro, and a handful of other global currencies. And the U.S. dollar has fallen about the same, almost 7.8% against the Canadian dollar. So really what that is this really extreme, aggressive, quantitative easing and interventions that's gone on from the central bank in the United States, primarily leading the charge there since the low in the stock market in March. And what they've succeeded in doing is weakening the dollar. And the inverse of that, the negatively correlated other side of the dollar is basically risk-on assets. So commodities have rallied strongly. The precious metals sector has rallied strongly. Oil is up significantly from then. These are all the other side of the U.S. dollar. So when you really break it down, you understand that we've been in a bear market rally since the March 20 low, and that now that the dollar has retreated almost 8%, it is very likely that we're going to have a rebound or a counter-trend rally again here where the dollar starts to strengthen against everyone's expectation and miraculously everything else starts to dump again. So, people have been reading all sorts of fundamental, trying to justify why the stock market has rallied. Again, this handful of companies, which are today at the most egregiously valued that they've ever been in history on everything, on, stocks to GDP, on market cap to sales, on market cap to profits, everything. We're in the biggest stock bubble now that we've ever had in the history of the world. And what that means is that we're just set up again for the next down leg. Now, they could extend it a bit longer here. It's hard to say. But fundamentally, all anyone that's done here is bought, if they've been buying this stuff, is paying more and more for less and less cash flow, future earnings, all that sort of thing. So as you can see in the chart I put on the blog of corporate profits and the S&P market cap since 1990, anytime you've had this kind of a big disconnect between the values of stocks and again in 99 into 2000, same thing. It was driven by a handful of .com names that were really pumping the overall index up. And when you had that huge disconnect and you saw profits begin to roll over, it was the start of the big burst in that stock market bubble. So today we're even in a more wild gap between that reality of earnings and the fantasy of stock prices. And I think that that's really set it up for this perfectly for this next leg down. So, at the same time, people say, well, the stock market isn't the economy. The economy is a different thing. Yeah, but ultimately it is always connected. The stock market is ultimately supposed to be a leading indicator of the economy. And when you look at charts, whether it's of the unemployment rate, of any sort of macro thing that matters in the real world in terms of consumption ability of the population, ultimately the stock market comes back to reconnect with that reality every cycle. So right now you've had this big collapse in employment, of course, in the last few months from the COVID shock as the stock market has gone the other way. Ultimately that has to recouple so that stocks need to come back down, because even with, the reopening efforts that have happened in the past couple of months, of course, we saw some jobs come back, because temporary layoffs were called back. But the big wave now, and this is the second revelation, I think, is that there's a lot of the companies, businesses, particularly of small businesses, that closed supposedly temporarily in the first wave of the shutdown, are now coming out and saying they're a permanent closure. And the stats, for example, in restaurants is like more than half, shopping and retail, more than a third of the companies, beauty and spa is more than a third, almost a third of any kind of fitness operation. So this service sector, where the bulk of the jobs have come from in the past decade, has been really just, is in an ongoing train wreck. And so it matters because not only is that, leading to vacancies and, unpaid rents, unpaid mortgages in the commercial sector, a loss of income, a loss of jobs, a loss of tax revenue to the government. So it's quite significant that this sector is in such distress. And of course, as we're seeing in the rest of the world, and even in your part of the world now, Alberta and British Columbia have been pretty flat in terms of the COVID numbers in the last few months. As soon as you have a reopening initiative, like you saw in many of the U.S. states and Ontario, for example, as soon as you start having people come back together in close and indoor spaces, and particularly, you get the big spike in the numbers again in terms of the infection rate. So there's no, mystery to that. That's just plain science, is the spread of the thing, and that's why social distancing is absolutely essential in keeping the spread down. So every time you try to reopen, you're going to have this big spike in infection rates, and that leads to more shutdowns. And each time that happens, you're losing more of the business sector, particularly the smaller businesses, but also many of the larger chains, which were already highly levered coming into this fiasco in the first place. So you've just got, something like 32 million Americans, 20% of the workforce, is on continuing unemployment claims right now. And in Canada, it's not much better. So that portion of, and yes, they've extended the CERB till the end of December in Canada, and they're arguing about how long to extend benefits in the United States. But even with that, as I've mentioned in the past, even with the extension, people are not able to keep current on all their bills, they're not paying all their rents, and are not getting ahead. What the other thing that's really significant here is that the money that is given to the people, this quote stimulus money, is going primarily into savings and debt repayment, which is a very important development. It's excellent in terms of that's exactly what people should be doing, because they've felt the vulnerability of their financial precariousness in this whole shock. They've come to appreciate that they were undersaved and overlevered. And so to the extent that they're able, above paying their rent and food kind of thing, they are deferring other loan payments, and they are trying to build up some savings and pay down debt. And you're seeing that both in the American figures and in the Canadian data. And that's significant because although that's better for the household to try and shore up their balance sheet and get some some stability there, ultimately it's not going to be stimulative for consumption in the economy. And with 60 to 70% of the North American economy dependent on consumer spending, you can see that these efforts, whether it's slashing interest rates that were already incredibly low, even lower, or whether it's trying to put money into the pockets of households, of course, emergency efforts, but in the end, not particularly stimulative for economic growth. So I think this recession that we're in now is certainly it's the worst we've seen in 100 years. And I think it's very likely to be a double dip style, more like something we saw in the formation of the 1981-82 double dip recession that went on so much longer than people wanted, and jobs are years to recover thereafter. And so that's why ultimately the stock market, delirious as it's been on a handful of picks, disconnected from reality, will find that it's, the ground falls out from underneath and it starts to mean revert with gravity once more. And I think ultimately that's going to present a great opportunity. But it's, the head fakes that have gone on in the past couple of months to sucker in people who thought, that it doesn't matter anymore, that earnings don't matter, that nothing matters, just, trading and stimulus. That is the last piece you need in the euphoria before the next leg down hits. And that's why it's always so damaging, because people have convinced themselves that price doesn't matter.
What about these so-called Robin Hooders, the brand new millennial traders who are using their surplus funds or extra time at home to get into trading? And so far, it seems they can't make any mistakes. Are they the ones who are really going to get burned?
Well, it's interesting. Yes, a good many of them are using leverage. So they're using either options, derivatives of some kind, and or levered money or borrowed money, which means that, of course, it magnifies any gains or wins you have on the way up, and it also magnifies collapses as they come on the way down. So yes, I think that they are, the data suggests that, more than 90% of people who make that attempt or do that kind of pursuit typically end up in a spectacular loss cycle at the end. So the odds are not good or in their favor, because they tend to be casino-like gambling mentality, and again, while the U.S. dollar's falling and everything's recovering or bouncing, except Treasury yields. Treasury yields have continued to go lower, which means that, again, the bond market's not buying this idea that we're through the worst of this pandemic and everything's recovering. The bond market's seeing secular stagnation as it looks forward. But, so the Robin Hooders this is the same .com crowd or the China, commodities traders from the 2008 cycle as well. They're just basically throwing money into a rising market and calling it genius, and then magnifying it and thinking they're really smart because, the gains look big on the way up. But again, there's no actual discipline or structure or logic or anything that shows any sort of savvy understanding or way to manage money in this environment. So it's always like a gamble that wins and then loses abruptly. And we are definitely seeing them self-fulfilling in terms of the things that they are, gravitating to are taking leaps and bounds. I mean, Tesla is an example. Tesla, of course, I have one of the cars. It's great technology, but the stock has risen 600% in the last year. And many of those trading types are in that stock. But what's really funny is that similar symbols, like TSLA is Tesla, but other symbols like TLSA and other things that are very close to it have also rallied an incredible amount, which are just like tiny little companies that no one actually knows what they do, but they're mistakenly buying it because they are thinking they're trading in Tesla. I mean, this is the reality that we're in here. So this is what I call a fantasy market for sure, because people are not even sure what they're trading, but they're wailing away. So you're definitely seeing a lot of dramatic moves in that sector. And of course, attracted by this whole non-friction of zero trades, the not paying any commissions for trades has attracted everyone like bugs to a light. But the fact is that these companies are selling their order flow to the sharks of the world, the hedge funds who are front-running the orders and, taking their nips and bits off and making their profits. So it's really like sharks around a school of fish. And in the end, I think that they're predictably vulnerable and going to be hurt in the end. But that's one crowd of people. The people that I'm more concerned about, quite honestly, is the mom and pops, is the folks who think that they are, investing in conservative income-producing assets. This is the mantra, right? And the typical financial community encourages them to be in these things alongside all these crazy trading activities, hedge funds, levered players, etc. And so what happens, of course, is that when the thing blows, it's kind of like multi-headed carbuncle. When it goes, the people that thought they were being conservative get wiped out along with the day traders. It really isn't discriminating. When the price avalanche begins, everything falls together. And in fact, the traders may be more inclined to jump out, right? Because they're not thinking of it as a long-term hold. They're thinking of it as a gamble or a trade. But it's the mom and pops that are holding these passive funds and ETFs, the things they've been counseled to hold on to, these sticks of dynamite that are burning, right? It's those people who get really hurt because they are thinking they're doing something conservative and prudent. They're told to hold on, and typically they don't blink until the thing is down, by half, and then they panic and sell. So it's that cohort of investor that gets really hurt, and that's lasting damage. And, we've seen that happen now 2 or 3 times in the last 20 years to this same cohort of people, and they're all that much older today. So this is why I really think, you can't afford to just passively hold ETFs and mutual funds in this environment. You have to look under the hood and see what is inside those pools. And if it's if it's zero cash and it's a bunch of these market assets that have been so volatile, you're likely to be in harm's way to a greater degree than you appreciate.
We'll have more with Danielle Park right after this.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Welcome back. We're speaking with Danielle Park. Danielle, one of the headlines in your blog, Juggling Dynamite, diseases have been transferring from animals to humans forever. We should be used to it by now. And we should be taking appropriate measures, I would think. Maybe we shouldn't have our farm animals live in our house?
Well, I've been doing a lot of research on the history of pandemics and the origins of them in the last couple of months, and I'm preparing our client month-end letter this month is going to talk about some of that. So it's basically just looking at the fact that, and it's funny because when I say this, you get trolled by people saying, oh, that's ridiculous, there's no evidence that these things come from viruses, which is exactly the opposite of what the evidence is, and it's established, it's not controversial, that the bulk of the coronavirus is from this zoonosis family, which is a subset of viruses that are spread from other animals. And we've been having that since time began. I mean, the plague in the early 12 and 1300s came from the fleas that were infected on rats that were looking for other hosts and leaping off onto humans, and that's how the plague spread, and it continued in waves for centuries, right, through Europe and many parts of the world, just as things like smallpox and all these other really significant viruses were also transmitted from, various types of animals. So really what it talks about, I guess the thing that I've come to in all the research and study that I've done is just that it's very basic, right? So this whole idea of how do you deal with it? Well, it's the same way that they dealt with it in the Middle Ages. Is you have to have social distancing. You have to keep people apart so that they can't infect each other. You have to let the virus die out. And if you don't do that, if you keep getting together in crowded environments or, not respecting, and masks, frankly, is an important part of social distancing, primarily because it reminds everyone while they're wearing masks that things are not normal. We have a short attention span as humans, and we have a tendency to forget, once we see our friend or once we get talking to someone, we forget about the need to stay apart so that our droplets don't drop on each other. But if you're wearing a mask, you're more likely to remember, oh, right, things aren't normal and I have to be careful about spacing. So that's one of the reasons that masks is so helpful in this primary goal, which is this social distancing aspect. So, they did that back then in the Spanish flu of 1918-19, which is probably the one that's most similar to what's happening right now in terms of the reach of this pandemic, is that they first of all, they hid the reality from people because, France and England and the U.S. were in the middle of, in Germany were in the middle of the First World War. So when the cases started to happen, the government didn't want to really tell people or talk it up too much because they were afraid it would undermine the war effort. And Spain, ironically, wasn't yet in the First World War, so they were free or allowing their media and doctors to report on these cases that were happening in their population. And so they were the first ones to kind of openly talk about this flu or this influenza that was spreading, and that's why it came to be called the Spanish flu, even though it originally probably began in the poultry farms of the United States, it seems. Certainly not in Spain. So, and then the next phase of that was once the revelation hit, was people going, okay, what do we do about it? And the same steps, the same social distancing, keeping apart, washing your hands a lot. They started to put sinks in the foyers of homes because they had running water at that point, and the revelation that it matters about cleaning one's hands was really important. So those things were the same, 100 years ago as they are today. And back then also they had recently discovered what the virus was. They were able to look at it under a microscope, and that almost gave people more confidence, like overconfidence in the fact that if they understood where the virus was coming from, that they assumed, we'd somehow be able to cure it or stop it. And of course that wasn't the case then, and it's still not the case right now with the coronavirus. So just understanding that you have a virus and that it's spreading is not necessarily going to give you a cure, right? So you're back to these same basic steps. And again, in the 1918-19 period, once the public understood what was going on and they started to take the steps, there was a whole bunch of people that were in these other camps, right, who didn't want to be told that they should social distance, who didn't want to wear masks. And you had to have a huge social pressure to force that change in behavior before they were able to actually get ahead or get the virus to die out. They never did cure it, right? It just dissipated. And some of its strains are still circling the world as the flus we get seasonally each year. There was also, ironically, an outbreak of the exact same virus in 1997 in Hong Kong, and they knew that because they had been able to pinpoint the virus through exhuming parts of lungs from people who had died in the pandemic of 1918, and they were able to actually isolate the virus and name it and know what it looked like under a microscope, so that when a young boy, a 3-year-old boy, died in Hong Kong in 1997, they were able to figure out really quickly that it was the exact same virus, and it had come actually from handling chickens in his classroom. They brought in baby chicks, and the children had been handling them. So to the horror, of course, of everyone, the medical community, the researchers were just, so terrified that this virus had resurfaced again. And what they did was they quickly figured out that it was related to the wet markets in Hong Kong, and they went into and culled, thousands and thousands and thousands of birds, and were able to wipe it out without, there was a bunch more people got sick, but they were able to stem that. So when you realize all this, you appreciate that what's unusual about the current outbreak is not that there's an outbreak, it's that it's taken this long for one to get this large in the world, and that the social distancing aspect is the only defense we currently have until we get a vaccine, which may or may not come, and even if it is discovered, will take some time to get spread throughout the entire population or enough of the population to quell this. So it really, and the other thing that's interesting is that the economic impacts have been traditionally after viral outbreaks where death tolls are high, you tended to have a resurgence in wages. It actually ended up being better for the workers who were left, which seems kind of morbid, but it's true. If you think about it, a whole bunch of people wiped out, you tend to get more work and wage pressure for the individuals that remained. Now today, it's less clear how that's going to work because we have this rapid technological innovation happening at the same time, which is displacing so many workers. And you also have, of course, access to global labor in a way that you didn't traditionally, or certainly not in past pandemics. So that piece is a bit of a red herring here, is trying to figure out how will we get, income gains back in the population in this environment. And that's why people are looking at all these, basic income programs, ideas that were, considered socialist or communist or crazy, even a year or two ago, are now on the table because the revelation is that we're in the midst of something that's really quite different and a tipping point in many ways. And that is actually what happened in all the other past pandemics as well in human history. You tended to have a lot of change come out of it, evolution. And it tended to be programs that were more friendly to workers and families to try and help get the economy back on its feet and get the houses back on their feet. So I think we're in the midst of a major shift here in terms of policy, and that could be positive in the long run. But ultimately, as I say, it's likely to be bad for consumption-driven economies because we're going to have more of a building up phase than a back to spending as normal phase.
We'll have more with Danielle Park right after the break.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Danielle Park. Danielle, is the pandemic going to change the face of food and agriculture?
Well, I think it's definitely one of the things that will help tip it. I think that the transition in food and agriculture has been underway for some time. The awareness that we can't feed 8 billion people on the earth the same way that we fed our grandparents when there was a couple of billion people on the earth. This idea that, factory farming has really run its course, that the illness that's come both in the animal population, the environment, and the human race because of this very unhealthy way of raising food and using our resources that has dominated, say, over the last 50 years is really coming to an end. And there's a bunch of different themes there. I mean, there's there's whatever the various motivations are, the reality is there's been this move to plant-based dairy, for example, that's been going on now for several years, and we've got really exponential growth in that particular commodity, that people are realizing that dairy is either, whether it's because it's making them ill or causing them lactose problems or whatever the rationale, a lot of people are starting to realize that they're better off when they don't consume dairy. And so that has driven this resurgence in various alternatives, plant-based milks, for example. You've also seen, for the people that are interested in more processed plant-based foods, that, the Beyond Burgers of the world, Beyond Beef, that sort of thing, Impossible Beef, that's really been part of this. And we've seen exponential growth again in, that type of product as a replacement for meat. But the reality is, again, that the more people appreciate that, there's this connection between how we're treating animals, and every time we have these markets or large production centers, this opens us up to the vulnerability of viruses transmitting into humans. And so one way to control that is certainly to go to a more plant-based diet, which, as I say, has already been in motion for quite some time. And I think so it's just another sort of reason why people will start to appreciate that, moving to a different way of eating and food production is probably smart on so many different levels. And again, there's rethinks, the Tony Suba crew, I've put their reports on the blog in the past because they've done one on the transition to EVs and autonomous driving, and now they've done one on agriculture that came out in the last year. And it really looks at this transition just like, 10 years from now, they're talking about how much different our food supply is likely to be in terms of how it's produced and what's consumed. And it's a good story for things like legumes and peas and these crops, which Canada can certainly grow, but it's not a bullish story for, meat production or dairy production per se. So you've got to find some kind of a transition for many of the people in that space so that they are able to succeed and prosper in this new model.
Danielle, thank you so much for chatting with us.
Hey, thank you, Jim.
My guest has been Danielle Park, editor of the popular blog Juggling Dynamite and president of Venable Park Investment Council Incorporated. Her website, jugglingdynamite.com. If you have any questions for Danielle or any of our other guests, you can send them to info@housestreet.com, our YouTube channel, Talk Digital Network. Find us on Twitter @HouseStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.